RBI Governor Shaktikanta addressed the media for a second time since the lockdown announcement over 3 weeks ago. And just like in the first one, he came up with a slew of announcements to alleviate the financial stress that is coming about as a result of the coronavirus pandemic. If you remember the first announcement, the messaging was clear. It was to the banks to lend, lend, and lend. Now, what is the big takeaway message from this one? And what are some announcements that should be highlighted? To talk about that, I'm going to bring in our editorial director, R. Jagannathan.
One, I think the main message is still the same. Just don't worry about the money. We will give the money. But this time, the idea is to be more focused in the lending. The people who are really hurting are the small and medium companies who are financed by the small and medium non-bank finance companies. So 50,000 crores is being made available to banks to invest in the of these kind of NBFCs. Second thing is another 50,000 crores is being made available to rural lending institutions like Nabard, also the Sidbi, which is again small development bank of India, small industries development bank of India, and National Housing Bank, which lends to refinances housing, which all three are important sectors. So 100,000 crores is the kitty this time for lending to various kinds of things. Other thing is banks are also this time getting an additional kick in the butt. Basically, they've been told that if you park money with us, that is the Reserve Bank, we will pay you less interest now. So that rate has been reduced from 4% fixed rate to 3.75. So now the banks will now have to start lending because by just keeping money idle with the Reserve Bank, they'll earn less. So all these messages are coming through. What they've also said was that in case in the process of lending, you actually end up with some bad loans, we will give you some kind of regulatory forbearance. And as far as loans that are already been given before March 1st, if they've not gone bad, for 180 days, you don't have to classify it as bad as long as for about 6 months. So that's the basic message. Again, lend in a more focused way to those who are really needing it this time.
Especially some of these measures help states out also because they've been pushing forward to release more money from the center. I think, for instance, the measure with providing more leeway to borrow through the ways and means account, for instance. Do states also get more access to sort of money to take care of their needs at the moment?
Yeah, one thing is ways and means financing, which is like borrowing from the Reserve Bank, is actually much cheaper than if states were to borrow directly from the market. States are currently borrowing at the market at 7.5% and 8%, which is a high interest rate, whereas the center borrows at about 6.5%. Ways and means advances are cheaper. So what states will now do is instead of borrowing expensively from the market, they will in the short term borrow from the Reserve Bank to ways and means advances, which is much cheaper. So they will not crowd the market and raise the interest rates there. So they will have access to easy finance, and the immediate needs when revenues are down, they will be able to finance through ways and means advances.
Right. Finally, Jaggi, the MPC has found this to be quite a testing time for them. How do you think they are faring? What's their role and relevance now and going forward?
MPC is now not at all relevant in the current situation. Whenever, unlike the developed markets where the US Fed or the European central banks are very, very large institutions and they can act with very large things, our MPC has a limited role of looking at inflation and interest rates, right? But in this pandemic, where you need to take quick action, you can't keep calling the MPC and have 6 wise men and 5 wise men and 1 lady deciding what to do about the economy. If you have to do something quickly, the Reserve Bank has to do. So the Reserve Bank finds that the NPC is not particularly relevant in this thing. So while they are keeping them in the loop, they are actually taking decisions. Like the repo rate cut was normally something that could have come only from the MPC, but the Reserve Bank has gone ahead and done it anyway. So basically, say that we'll keep you guys in mind, but we will do what we have to do. You can't let the economy sink waiting for you to meet 2 months later.
Right. Thank you, Jaggi, for your insights.
Thank you.